Bloomberg Audio Studios. Podcasts, radio, news.
Zambia has become the first country in Africa to allow Chinese mining firms to pay taxes in yuan.
Zambia is aligning its fiscal policy with real trade flows, prioritizing efficiency and cost reduction, and ensuring the foreign exchange pressures do not threaten economic stability.
The move comes as Beijing looks to boost global use of the yuan, using trade to curb its dependence on the dollar.
China always wanted to internationalize the yuan. China is the second largest economy in the world. It makes more sense.
On this week's Next Africa podcast, we'll ask why countries in Africa are keen to get on board with using the yuan, what it means for Chinese influence on the continent, and whether de-dollarization is really possible. I'm Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. And joining me to discuss this today is our Bloomberg reporter, Matthew Hill, and our Africa economist, Yvonne Mhango. Thank you both so much for joining us. Matt, maybe we start with you, and let's just start in Zambia, because that is the big story. What's actually going to change if, in fact, we do see this new deal going through and more taxes being paid in yuan across the continent?
The easiest way to understand it is to look at the mechanics. And it all starts with copper. Zambia's Africa's second biggest copper producer. China buys most of the world's copper. And China is also by far Zambia's biggest bilateral creditor. So basically what this does is it allows Chinese mining companies operating in Zambia and producing copper to then sell that copper for renminbi or yuan in China, and then take that currency and use it to then pay royalties and taxes in Zambia in yuan, which the Zambian government can then add to its foreign exchange reserves, and then use that same currency to then service its debt to China. So it essentially creates a loop and cuts out the dollar as a middleman. It also allows the Zambian government to diversify its foreign exchange reserves in the hope that it will also then reduce local demand for the dollar in Zambia. And this is all happening in parallel to a government initiative inside the country to de-dollarize the economy and reduce its dependence on the greenback.
And we know that's not something that the U.S. president at least would want to hear. But Matthew, it's been increasing in discussion, as you were mentioning. It's getting more and more eyeballs. When we think about some of the other countries across the continent that are maybe looking to this model or even already are making use of the yuan, what are some of the instances that you think are worth pointing out?
Just in recent months, we've seen Kenya converting its dollar loans to China into renminbi. Ethiopia told us that it's in talks to do the same. And also last year, the African Export-Import Bank sold its debut Panda bond, which is a bond denominated in renminbi or yuan. Zambia is also looking at doing a currency swap with China, joining other African nations that have done the same. And also just recently, there was an interesting study that came out from Boston University that found that China is increasingly looking at employing RMB-denominated loans, especially in Africa, where in Kenya, again, for example, all of the infrastructure loans that it signed in 2024 with China were denominated in renminbi. And of course, that contrasts with the US dollar denominated borrowing that dominated China's lending to Kenya in the 2010s.
So let's stick on that here, because when we look at the reserves and the reserve currency, Yvonne, I think it's still safe to say that the dollar is the reserve currency of the world. But when we look at the African reserves that are fixated in the dollar versus the yuan, What has your analysis been able to tell you, Yvonne?
In terms of the share of Chinese currency in African countries' reserves, that's still relatively modest. We're talking about 5% and below. So a country like Kenya, for instance, may have up to 5% of its reserves in Chinese currency. But in most countries, it's much less than that. There is talk of increasing that share. For several countries like Rwanda, Nigeria, and Botswana have mentioned that. There's also countries that have signed swap agreements with China in order to increase the liquidity of Chinese yuan or renminbi in the reserve banks. And this is all a shift towards trying to diversify away from the United States dollar. Part of the reason for that, of course, is that you're seeing African countries do a lot more trade with China. This makes sense for countries that are importing as much as they're exporting with China. But if you are importing from China, what you want to do is have an equivalent amount of merchandise that you're selling to China in order to make those reserves make sense to you. Convertibility is also an issue. You want to hold a currency that you think is easily acceptable to your trade partners. And in an environment where a lot of the payment systems, a lot of the invoicing is still in US dollars, you find that most countries will default to the United States dollar because of convertibility issues.
Does it make sense then why we are seeing China continue to push to make use of the yuan more and more palatable internationally?
Yes, I think a big trigger for that was, of course, Russia's invasion of Ukraine, when many saw what was now termed as dollar weaponization through the sanctions. And that had raised many eyebrows, particularly in the global south, and led to this discourse we're hearing of de-dollarization, because many felt vulnerable to their huge exposure to the US monetary system, US monetary policy, the fact that the payment infrastructure as it stands today is essentially the architecture of the US. It's controlled by the US. So China would like to see the yuan internationalized, particularly because they dominate global trade. So it makes sense for them to see more of its trade partners use their currency, particularly on the trade front.
Right, especially as there are more and more trade deals that are happening with a number of African countries. Hold that thought. I want you both to stick with us. We're going to take a quick break. And when we come back, we'll talk about why African countries are seeing some of the benefits of these deals. And if, of course, there could be any risks. We'll be right back. Welcome back. Today, we are talking about China's efforts to boost the use of the yuan across Africa. Matthew Hill and Yvonne Mhango are still with me. Matt, what is in it for these African countries? You speak to a number of officials on a day-to-day basis about these processes. What is it that they're telling you?
Yeah, Jen, that's a great question. I mean, just building on from what Yvonne was saying, we know that China-Africa trade has been expanding quite rapidly, and last year actually reached a new record of just below $350 billion. So it's massive. Looking at what's in it for African countries increasing their use of the yuan. If you look at Zambia, for example, the deal provides cost savings to both sides, because basically they are avoiding costly transaction fees from not having to convert to dollars and back and dollars and back. When you're talking about such massive volumes, the numbers aren't small. It also diversifies currency risks for African countries where the dollar has played like such a massively dominant role. And it also, the Zambian government says that it can help to reduce local demand and dependence on the dollar. And we've seen in past years instances where there have been very severe dollar shortages in African countries. In Kenya's case, and perhaps Ethiopia too, it does come with cost savings on interest rates. When Kenya converted their dollar-denominated debt to China into yuan last year, they said that it would come with significantly lower interest rates. And also just building on what Yvonne was saying about the global financial architecture and risks of sanctions if the dollar is weaponized. China's recognized those risks, and I think some African countries too are quite keen to have perhaps a plan B.
Yeah, Yvonne, maybe you jump in here on that. Where do you see Washington's role in all of this? Do you potentially see retaliation, especially considering, there's quite a lot of talk about Fed independence this year, potentially who the next Fed chair will be. How do you factor what we're seeing in the U.S. into this discussion?
I think we'll certainly see resistance. We've already seen it. We've seen Donald Trump respond to BRICS when BRICS talked about de-dollarizing. So I don't think you're going to see them lie down and take it lightly. There will be resistance to it. That said, I don't think China intends to replace the dollar. I just think they want the use of the yuan to reflect China's role in global trade, which I think does make sense. China's role in global trade has just increased massively over the past 2 to 3 decades. And in Africa's case, if we look at their share of the yuan in the reserves in African countries, it doesn't reflect that huge increase in terms of trade. And when we talk about trade, we haven't even talked about the share of debts or loans that are coming from China as a share of total international financing that's been coming to Africa, essentially replaced or exceeded what's coming from international financial institutions. So I think what countries want, both in China's front, but also the rest of the global south, is for the trade and also their financial transactions to reflect the countries that are transacting globally. That said, though, I think the challenge, though, for China, particularly on the capital, in terms of its capital count, is that it's not fully liberalized. There's still capital restrictions that inhibit that full convertibility, which China also at this stage doesn't want because it poses risks to its domestic financial system. So as it stands today, the United States dollar still plays a significant role and will play that role for many years to come. However, there is room for the yuan, particularly in Africa.
Matt, maybe we just end on what Yvonne was just bringing up, which is about debt and some of these deals between African countries and China, which brings me to China's Belt and Road Initiative. You've dug into some of the data that we've just gotten for 2025. What was the scale like last year? And potentially, what does it tell us about what that means for the future of these relationships?
Griffith University in Brisbane just released a report saying that in 2025, there was the highest Belt and Road Initiative engagement globally for any year. So it reached a record with $128 billion in construction contracts and then another $85 billion in investments. And more interestingly, perhaps, is that Africa topped the ranks of BRI engagement. So there really is heightening engagement between African countries and China. And if you look at the broader global context of the tariff wars and everything that's happened under the second Trump administration, there's definitely a big push from China to diversify its trade. And Africa's offering a great opportunity for it to do so. And we're seeing them really making a big push into the continent, not only from a trade point of view, but also from investment.
Matt and Yvonne, thank you both again so much for joining us and helping us make sense of the story this week. And you can read all of our coverage on China in Africa across Bloomberg platforms now. Here's some of the other stories we've been following across the region this week. Uganda's main opposition party said one of its top officials had been arrested by security operatives, the third to be detained since last week's election that handed President Yoweri Museveni a 7th term. And members of Senegal's national football team will be paid bonuses and given plots of land after their triumph in the Africa Cup of Nations tournament. Senegal's team, known as the Lions of Teranga, sealed a dramatic 1-0 victory over host nation Morocco in the final of the Africa Cup of Nations at the weekend. You can follow these stories across Bloomberg, including the Next Africa newsletter. We'll put a link to that in the show notes. This program was produced by Adrian Bradley and Tiwa Adebayo. Don't forget to follow and review this show wherever you usually get your podcasts. I'm Jennifer Zabasajja. Thanks as always for listening.